Hello and welcome to May 11th. Alphas have 2 wins on the scoreboard. Let's go look at those charts. Start off here with, well, there's Capri. And Capri came in at 29.1, $160 for the trade, one contract, $2 in fees, 158 against a nut of 43.31 with a new O of 41.73. So that was win number one. Win number two is what was featured on the title card, and that is Raytheon. And Raytheon came in with a 33 percentage profit for the trade. It took 70 days. I remember this is the one I kept talking about that was languishing in the basement for the longest time. It wouldn't die, but it continued on and finally got out. And it came up with $155 for one contract with $2 in fees against an ode of 824 and now has a new O of 671. The important part is that we got back our trading capital and our buying power has increased significantly. And we're going to be going over the ending of today's report. We'll be running the scanner for tomorrow to see if we have any opportunity here on this buying power. And that said, let's go on now to the new leader for the alphas, and that is T for AT&T. And so there's AT&T. We did close above the third ratio. We do have our dipper low right here, and we did get a pullback here. The market did have a pretty good pullback today, and now we're waiting for the third ratio. Let's say we're waiting for the higher low on the right side so that we can get a dipper low to move up here. Now note that this is a June expiration, which means we're getting down to where we are only 7 days away from the 30-day rule. That's right. The 30-day rule will be initiated on the closing of May 18th. Will be at the last 30 days for AT&T, and that means we'll be on the last bar low. So if this goes climbing up, we'll be a vast bar low until we get taken out and get back our trading capital plus a little bit of profit against the ode of 37.61. That said, that takes us on now to IAU. And IAU, recall this one here is not a loss leader. This came from the open field from my weekend mastermind trading group at OTA, and then I ran the scanner to say, hey, let's run the scanner and see what it does in the open market. And this particular one came up that day. This was back on the weekend of 315, the weekend prior to 315. And the only thing I noticed I said that this was an implied volatility of 5. It was very, in my opinion, very dangerous, also in the opinion of some of the traders. And it struggled for a while, but now it's holding on to 25%. Not a big profit of 52. Remember, it has no ode. I was shooting for a target of a 2% cap of $122. But if it doesn't happen, it doesn't happen because it's not an ode and there'll be total profit. In addition, most importantly, is we get back more buying power into our trading capital. That becomes very important. Okay, take us on now to the last of the positive, and that's TMUS. Notice we only have 4 remaining out of a field of 11. We had 11 trades in play about 2 to 3 weeks ago, and everybody hit their exit. We had 4 exits alone last week that were in the negative, but the account went up to $7,400. So remember, this is the ball. This is the game. These are your players. They're going to do what they're going to do, and that's it. You accept what they do and move on. But you're keeping eyes on your risk management here, and you're keeping eye on that you do not go too low on your buying power, so that when you do get into a trade, you are not get a margin call. A margin call is when you have a trade that triggers and you're short of the entire amount. Now, some houses will reject the order outright, saying not enough capital, and some will trigger your margin. It depends on your terms and conditions. when you set up your account. So it's extremely important that if you're going to be all cash, you let Thinkorswim, TradeStation, E-Trade, who else is out there now? Tastyworks, Interactive Broker. All these are the major players in the brokerage field. There are minor ones in there too. But the bottom line is you have to let them know up front. Are you going to be a margin player or not? If you're a margin player, make sure you have reserve capital in case you get a margin call. Because if you get a margin call and you do not send the money right away, which was usually give you about 24 hours, maybe some longer. Here, I think it's going to give you 72 hours. But the bottom line is that if you don't have the capital, they'll liquidate anything here. If you have positive, they don't care. They'll liquidate anything here to satisfy that margin call. So it's very imperative that you have enough capital if you do margin calls, or be safe, no margin calls, all cash. Okay, that takes us to go ahead and conclude now with T minus. In T minus, recall that T minus was the one that I had a bad fill on, and I was not too happy about that, but it happens. And we just waited it out, and now we are in profit. Not a lot of profit, but the bottom line is, again, rule number one, protect capital, get that money back. Okay, so that is the conclusion there. And we are in T minus is in August, so we are in the third ratio rule here for the dipper low. We're waiting for, we had a nice up here, so we can get a higher low on the right side. We can get our dipper low moved up here for T minus. Okay, now let's go ahead and do the numbers while we're here. Remember, this is the ball, and it's 69.45 is what we have, minus the 55.33, which was the start of the capital at the beginning of the year. 14.12, divide that by the capital of the beginning of the year as a percentage, and we are 25.5% ahead. Where is the SPY? 13.2. So we are still beating the SPY. Right there. There's the SPY right there. Year to date. Right there. Year to date and year to date. So we are doing real good there. Now, so let's go on to another point. How do we know, how do you guys know that I'm actually telling you the truth about this 50-5300? Well, here's the point. At the Thinkorswim, this calendar is a setback calendar. So I can go back here and I can go to the setback calendar and I can go and see, it's okay, I want January 1st. Right there. And I'll put it over here and I'll go ahead and I'll go back to January 1st. Right there. And look, and there it is. I had no trades. We were flat and 55.33. That is the benchmark for the start of the year to back. That's how it works. Okay, with that said, we're going to have to reset the calendar, and now we're going to go hunting because we don't have any trades on. And one of the mantras in trading is known as idle money makes no money. But you got to be careful with that pitfall. You can't trade recklessly. You cannot trade off the seat of your pants. You got to trade with a system. So the system says there's no trades, you don't trade. So let's find out what we have for Stochastic Weekly downtrend in for the alphas right there. And we'll run the scanner. We have 45 that match up. And now we're running the scanner and see, and we have nothing for tomorrow. All right, so let's go on now to the other scanner for the upside. Come down here. And now we have our upside. Here's the Stochastic Weekly uptrend alpha account again. And we're going to run the scanner. And nothing. So that is one of the drawbacks of using the Stochastic Weekly scanner. It's not giving us any opportunity. So idle money is making no money. But at the same time, we're being cautious about our trading because we are 25.5% ahead. And that's almost more. That's more than 30. That's almost 12% ahead of the market. And with that said, we'll conclude today's report for Alphas have 2 wins and 33% profit and 24 wins for year to date. And with that, thank you very much for stopping by and checking it out.